Hey, it's Nate Allred here with the Apiary Fund. We are here at the Apiary Fund Summit. We have the biggest summit that we've ever had. We have some exciting things going on. A lot of people making a lot of money. We just wanted to give you a quick snapshot of kind of what happens and what goes on at the summit. A little recap. Earlier this morning we had a team trading session. We took a straw poll. Over 70% of the teams in there had made money. Along with that, Sean Lucas did a trader on the street. Phenomenal results. It was amazing. We made money. I wanted to give you guys kind of a sneak peek as to what's going on. We have Ron Evans in there. He's the risk manager talking about how to get funded. So I just wanted to give you a sneak peek of what happens at the summits. Come follow me.
Pre-fund automatically unlocked when Gold 1 is completed. Gold 1 gets a little harder. Silver's fun. It's a little tough, but when you get to gold, we start to make sure that those sound principles are working and that you know what is required of you, and we make you do those things. Funded automatically, pre-fund starts at 1,000, and then because the funded account, when it's unlocked, will be 1,000. And then in 2 weeks, as soon as I get the email that you're funded, I put on my calendar. I send you an email. I put on my calendar to check back on you in 2 weeks to see how you're doing. And what I want to see is that you're maintaining the account. I don't need to see miracles or anything fantastic. I just don't want you to lose a lot. So in that 2 weeks, be patient. And that's another thing that we're trying to teach you. Be patient in that 2 weeks. Don't jump in there and just start go from 0.01 lots to one full lot. Well, you can't, but you know what I mean. Don't go too big, because then you start losing too fast. And then instead of you getting an email saying, I've just added $1,500 to your account, congratulations, great job of maintaining your account, you'll get an email saying, I had to disable your account. I need you to go back through pre-fund until you figure it out again. And we don't want that. So be patient during that 2 weeks until you, and use those principles that you're learning.
Question?
Yes?
I don't know what pre-fund account means.
Pre-fund means you've done a really good job and you're basically approved for funding, but you've been trading in a $10,000 account. So we lower that amount to what you're going to get funded at. So during that pre-fund process, we want to see that you've taken all the sound principles you're learning, apply them to the smaller account now, so that we can see that you can trade now with the account that we're going to give you with live money. And then after you get through that pre-fund period, I mean, it's still simulated, it's not live yet. And then once you've gone through that, then it'll be live at that same amount. Does that make sense?
Yes.
Okay.
Thank you.
You bet. It's a good question. So if you didn't hear, he's asking what pre-fund means. A lot of you may not know. Pre-fund is just preparing for funded. You've done a really good job. We're getting you prepared to get that live account. And that's basically all it is.
That's in Gold 2?
Gold 2. Yeah, Gold 2 is the pre-fund level. Continue, now that you're funded, you continue to trade with sound principles. So I went over that. If you follow what you did to get to that point, you'll be golden. The problem is too many people want to make money too fast. And it's not going to happen at $2,500, especially $1,000. You're just not going to make a lot. If you can make a little bit, gain your confidence, and slowly progress, you'll start getting larger accounts. Then it starts to make a little more sense. 5,000 and 10,000, that's a little bit easier. You don't have to use big lot sizes, and you can still make money. So be patient. Continue to trade the way you did. Don't go back to any of the bad habits you had. Be patient. Be consistent, like I said, to get that extra $1,500. And then you're eligible for another increase after 3 months. So in you're going to get some paperwork when you're funded from me. And one of them says that you need to be, is Sean in here? It says that you need to be 3 months consecutive. I'm not going to make you be consecutive 3 months. So I'm still testing you. You're still testing yourself. If you give me 3 months, even if you miss a month, we're still going to increase you. I just want to see that you're getting something accomplished and that you're staying above sea level, basically. Because if you have a bad month and you can bring it back up, that's awesome. That's even more encouraging than just staying a few dollars above each month. So the first increase or two, I may not be that rigid. After that, we are a little bit more rigid on making sure that you're consistent for a couple months in a row. Bad habits, going back to bad trade strategies. Like I said, a lot of people get mad. They go, they're in pre-fund or they're in gold 2. This is not my trading style. Why are you making me do this? Well, we're making you do this because we know that it works. And then what happens, they force themselves to go through it. They do really good, and I see these nice equity curves. And then within a month, their equity curve's going the other way. And then they start blaming it on the risk management software. You guys stopped me out. It was turned around right after you stopped me out. Yeah, it probably did for a little while, but then it continued the wrong way again. And that's why we have that risk management software, is we have to control. Imagine all of you losing at the same time, and even hitting 5% at the same time, how big of a loss that is for us. That's why we have to have those controls in place. Yeah, it's going to turn around a lot, but there's those times when it doesn't, and that's when we take a huge loss. A good story, and I don't know if I told this story last time, and this wasn't firsthand. This was from a young man that I was talking to that was trading for us. He was going to a university called Utah Valley University down in Orem, Utah. And there was a, I don't know if you call them agents, or he worked for the SEC. And he was there doing a lecture at that university, but he was also in town for another reason. There was a commodities and futures company that was doing really good. So they'd been investigating them for a while. They kept showing these enormous returns, month after month, year after year, for about 2 or 3 years. And as they investigated, they found out that he was doing really good with the closed trades. Over here, hidden in another separate place, they had open trades that were losing more than they'd made over the last 2 years. So that's a perfect example of, you've got to stop yourself out. You have to take those losses. You may not make as much when you do that, and your win-loss ratio may be a little bit worse, but if you control those losses and get back in, you're not going to have that worry. And I guess that they went bankrupt. They had to be closed down. They got fined. A lot of things happened. But to have that many losses kind of hidden in the back and just telling people about your closed trades is not good. I've actually had that. People tell me, I'm doing good, Ron. I'm ready for an increase. And I go, oh, yeah, awesome. Look, they made $500 this month. And then I scroll down, and there's all these open and pending trades, and there's about $500 in losses. And they've been open for 26 days, you know, or something like that. There's a few things you'll get by me, but there's some things that won't get by me. So I've done this for a long time now, and I'm getting used to knowing where to look and what to look at. So just manage your trades and don't let the losers, and that's the other thing that I'll see. People that are struggling, their losing trades will be open for a day or 10 hours. Their winning trades are open for 5 minutes, 10 minutes. What does that tell you? It tells you they're not willing to take the loss. They wait until it gets to where they just have to, or the risk management software stops them out. So keep an eye on that. If you have to change your strategy, just start to evaluate it. You're going to learn some things about back testing from Todd today. That's a good thing to do. If you're struggling with your strategy, start to back test it a little bit and see, why isn't it working? If I do this every time, and be honest with your back testing, if I do this every time, what are my odds of being successful? And you'll see. You'll get to see that it either is working or it won't work. And if you stick to that plan and it's working, it's still going to work. It will work more times than not. You just have to be able to trust that it's going to work. Example of bad habits. So these are some examples of pre-fund trade, pre-fund accounts. Good pre-fund account, you can see that he got one trade bigger than the biggest loss. So his averages were actually pretty good. Actually, I don't know if it's a him or a her, but yeah, it's a pre-fund account. 1,074. So they're up 74. That's not a lot of money, but that's okay. That's really good in a $1,000 account. This person should be excited. This is after they got funded. Something changed, right? Sometimes it's just mental. Sometimes psychologically, they get so excited and they just get too quick. And other times as they go back to their old habits and they start doing what they used to do, and if you get too many trades on at once, you get too many trades against you backwards, they'll all get stopped out for risk, and I think that's what happened. Here's another one. They started off with a little bit bigger trades, and they got a little more conservative so they could get funded, and then they got funded, and then that's what happened. And these are the group of trades that they held and got risked out. So they held onto those losers in those little bunches, and then eventually they catch up to you. So when you go into a trade, have your plan in mind and stick to it. Old habits, not using stops that are outside 2%. So I see people using stops. And when I evaluate their account, that's one thing. I'll just take a trade at random and I'll look and say, okay, where's their stop at? Where's their take profit? And sometimes their stop will be 1,000 pips. And their take profit's at, 10 pips. And they're being profitable because what they're doing is they're letting their losses either get stopped out by risk or they're hoping they'll come back. And they do. A lot of times they'll come back. I'll admit that. But we're not in the business of hope, right? We want to make sure that it's consistent and that you're not waiting and hoping and things will come back. Using too large a lot size. Not having a reward risk ratio. I think the question yesterday is how do I keep getting bigger losses than my winners. And that's the reason is that when you go into a trade, you need to know what your odds are of making this amount and what your odds are of making, what your stop loss is going to be. So your reward is, am I risking $5 to make $1? Growing up in Vegas, I can tell you that's not good odds. Am I risking $2 to make $1? Now, if you got a really good win-loss ratio, you can possibly make money. At 1.5, most of the time you'll make money. But if you can get the opposite, if you can risk $1 to make $2, you're going to make money all day long. And it's going to be more than somebody that's has a backwards reward risk ratio. So that's a big part of your strategy is minimum it should be 1-to-1. Now Sean, he does it a little different, right? He's scalping and he's getting some backwards losses, but his wins outweigh his losses by so much that he's able to absorb that, and that's okay. You guys aren't to that point yet, so we need you guys to start with some good sound principles and try to keep those as close to 1-to-1 as you can. Revenge trading, everybody know what that is? A few of you do. You take a couple big losses like that one I showed you. So you take those losses, so what do? You put on a whole bunch more bigger trades and you start going after it and they go against you right away, and so you hold on to those. And so you just keep doing the same thing over and over and over, not changing anything you did. So you're just kind of chasing those bad trades you already put on without changing anything. So you're trying to get revenge on that market, knowing I know I'm right, I'm not. Well, eventually it proves to you that you're not right. Old habits that can help. Use stops on all your trades. Calculate your risk for use of proper lot size. So Sean went over that a little bit, I think, this morning. He talked about that. Okay, if I'm the type of person, there was a $1,000 account question. If I've only got a $1,000 account and I'm putting on 10 trades, how long before they go backwards am I going to get stopped out? So knowing what lot size, it's always best just to stay as small as you can in that $1,000 account. Once you get to 2,500, you can use a little bit more, but it depends on how many trades you take at once. The lot size is going to depend on that. So if you're going to take a lot of trades at once, you got to stay small. If you're going to only take 2 or 3 trades, you can go a little bit larger. So just make sure that you compensate for how many trades you have at once. Because I know a lot of you will trade different pairs, and so that means you're in and out of different trades at the same time. You may have several trades going at the same time. You've got to calculate that. And a good rule of thumb is just use the euro-US dollar, that it's dollar for dollar, right? So if I'm using 0.01, I'm using 10 cents. If I'm using 0.10, I'm using $1, and so on.
There's a sneak peek of the Apiary Fund Summit. We kind of wanted to show you guys what goes on. Awesome material, awesome training, fantastic content. If you have the chance to come to one of these summits, make it a priority. They are by far and away the best events that we do, and hopefully we'll see you guys at the next summit. Don't forget to subscribe to our YouTube channel, and we'll see you at the next summit.